to our tutorial today. Nice to have you all present. This morning we'll be taking you guys on how to analyze the market profitably. So just to begin with, I would like to show us how we can add up our two major markets, which is Crash 500 and Crash 1000. So to begin with, we want to add Crash 1000. I believe you've downloaded your MT5 for PC from the derive.com website. You go to this arrow, as you can see on our screen. You click on it, you will see Crash 500, as you can see. Then you see Crash 1000. So we'll be adding Crash 1000 first. So you click on it. As you can see, we have Crash 1000 added. So how do we modify the candles or the charts so that it will look more clear and more presentable for us to easily analyze? You right click, then you go down to properties, select. So from here we need to modify our charts or our candle. You click on show. You remove the tick from show grid. As you can see, you remove it. Then you move on to colors. Bar up should remain lime. Then bar down should be changed to red. Then book candle should be lime. Book candle should be lime. You select lime. Then bear candle should be red. Select red. We are done. You click OK. As you can see, our chart has changed. It looks more clearer now. Very presentable. So let's continue. So that's how you add up your Crash 1000. And this method is applicable to Crash 500 if you are to add. So let's start with Crash 1000. Now, how do you trade this market profitably? How do you make money from this market? One thing we want to have in mind is that the market does not move randomly. It follows a pattern. It follows a trend. We call it trend. So the market respects trend a lot. So we want to follow the trend. When you trade with the trend, you make money. But when you go against the trend, you lose money. So you want to be at the strong side of the market by following the market trend. So when you follow the trend, you make money. When you go against the trend, you lose money. So have that principle at the back of your mind when you are trading. So how do you identify market trend? So market trend comes in the form of support and resistance. Support and resistance. Market respects support and resistance. So these are candle. These are candlestick, and we have here is a 1 hour time frame. You can actually change it to whatever time frame you want to trade. We have 5 minutes time frame, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, 1 month. So each of the time frame has its own trend. The trend you see on 5 minutes will be different from 1 hour, and the trend you see on 1 hour will be different from 1 day. So the markets, when you check on each of the time frame, you will see something different that you can trade. So don't just limit yourself to just 1 hour time frame or just a 15 minutes time frame. You can trade all time frame because each of the time frame has something to tell you. There's a message contained on each of the time frame. So have that why trading the markets. Now we want to begin with 5 minutes. Okay, let's go to 15. Let's go to 15 minutes time frame. Now when you look at this, this is the 15 minutes time frame. Now how do we identify support and resistance? How do we identify support and resistance? Now when you look at this is our tools we'll be using to analyze the market. We use this draw trend line to analyze the market. Now when you look at this, these are support, these are resistance, these are resistance. As you can see, the resistance can also be referred as the how do I put it for us so easy to understand? It's more like a roof. It's more like a roof of a house. When you jump up, if your head should hit the roof of the house, what will happen? You must surely come down. Or if you throw something and that thing should hit the roof of your house, what will happen? It will surely come down. So that's how it is with the market. So if the market should hit any resistance, automatically there's a high tendency that it will drop. As you can see in the chart, this is the resistance here. Now when the market approached that resistance, what happened? You can see that pullback. You saw what happened. So those who took sell position from here, they must have made money from the market. You see? Let me reduce it to 5 minutes time frame so that we can see it very clear. Now look at this. These are resistance here. These are obstacle. Under for resistance is obstacle. So these are obstacle here. Now when this market approached this obstacle in extension, what happened? The market reacted to this, then it came back down, it dropped. So that's how it is. So those who took sell here, they made money, but those who ignorantly took buy here, they close that trade at loss. You see? So that's one thing for us to always have in mind. When you understand the market, then surely you will make money. But if you trade ignorantly, then you will lose money. So those who have the knowledge of the market, they made money from here. So it is here also. When you look at this, you will see support here. These are supports. You see how the market reacted. This is under resistance instead. You see how the market reacted. This resistance 1, resistance 2. When the market hit the resistance, what happened? You saw how the market reacted. It came back down. Then under resistance 3, the market hits the line again. The resistance line, what happened? It reacted. But this time around, the fourth movement, this is first movement, second movement, third movement. Now the fourth movement, the market was able to break out from the resistance trend. It broke out. Now what happened? So this gave people the opportunity to buy. At the close of this 5 minutes candle, those who understand the market must have taken a buy at this candle here. Then what happened? Look, you saw the market rally up. You see? So those who took a buy here, surely they made money, they made profit from the market. So that's how it is with the market. So resistance can also be turned to support. If the market should pull through, to break this line, this resistance line, then it's a short buy. Because even if the market should pull back, then this resistance formally will automatically turn to support for the market. Because if the market should pull back, looking at this, it will surely rest on this line, which was formerly resistance. It will now turn to support. Then the market will continue its trend. Then it will trend up. You see? It will trend up. It will continue going up. So that's how it is. So how do we identify support and resistance? That's one thing we need to always have in mind. How do I identify so that I don't place trade at the wrong time? When you place trade at the wrong time, then you lose money. So you have to be very, very watchful to identify resistance and support. Support and resistance and support. So when we identify resistance, then we know that this market won't be safe for us to take a buy. Then when we recognize support, then we know that this market won't be wise for us to take a sell. So when we find a support, then definitely it's an opportunity for us to buy. When we find resistance, then it's an opportunity for us to do or to take a sell. So that's how it works. So we need to train our eyes on how to identify these key levels, in the market. So these are key levels. This is another key level. This is another key level. So that's for resistance. What you see here is resistance. You see, you take your draw horizontal line, you click on it, then you place it. Once you place it, you see your resistance. So whenever the market gets to this level, it will surely react. It will surely react to that level, because most people do take sell, or most people leave the market at that stage. So there's a likelihood that the market will drop. So you don't want to remain in the market at that point. You want to close your position. If you take a buy maybe from here, then when it gets to this resistance, it will be foolish to still hold on to that trade. You need to do what? You need to leave the market immediately. At this level, you need to leave the market, because most people will leave because they know that markets react to this level. Buyers will leave at this point. Why? Because there's an obstacle that will prevent this market to go further. So buyers will leave this market. So once they are leaving, sellers will come in. And once sellers come in, the market will pull. So it's a two-way market. Don't expect the market to keep on going up for you. No, it won't. It will get to a point, sellers will come in. It will get to a point, buyers will come in. So it's a two-way market. So we want to identify where we stand, and we want to know when to leave the market. So having that in mind will help us to trade wisely, and we'll make money out of the market. So this for resistance. Now let's look for a bigger picture for support. Let's look for a bigger picture for support. Let's check the 15 minutes time frame. Let's look for a bigger picture for support. Now look at this. Formerly this was resistance, because if you look at this, take your horizontal line, then you place it on the first resistance. You can see this is the first resistance. Then in the extension, see how the market reacted. You see how the market reacted. So this resistance line in the extension, the market reacted, because most people knew that this market will react. Those who took a buy, they left the market at this point, because they know that this is an obstacle to the market. It will prevent the market from going further from this level. So what happened? They left the market, and when they were leaving the market, sellers, they take position. Buyers leave the market for sellers to take position. So if you are buying this market, or if you bought this market and you were still holding the trades at this level, then you were not trading wisely. So it will be wise for you to leave at this resistance level to close your buy position. Now look at this. In the extension of the trend line, in the extension, look at it. The market was able to break through. It came out from the obstacle. You see, it came out. It was able to survive the resistance or the obstacle. It came out. You see, now it was an opportunity for buyers now to come in. It was an opportunity for buyers to come in. So buyers took their buy. At the close of this candle, then it will be safe for you to enter at this candle, because even if this market should pull back, then the former resistance automatically has turned to support for the market. It has turned to support, because if the market should pull back, then this resistance, which has now turned to support, will hold the market. It will hold the market from going back again. If this market should pull down, maybe assuming you take a buy somewhere here, this market should pull, it will surely rest on this line, which is now support for the market. It will support the market from going down. You see, it supports it. Then after the support, you see the market going back up again. Then it will continue trend. The market will continue trend. It will continue trend. So from here to here, you would have made a lot of money from your market. You see, it will continue trend. It's going to trend up. That's how it is. So it's just for us to get the concept of how the market works. You might understand the concepts, then definitely you will make money. You will make cool money from the market. You will make cool money from the market. So that's how it is. Understand the principle, understand the logic, get the skill, then you will make money. So the market does not just move randomly. It doesn't move. The market follows principle. So that's the principle we are sharing with you guys now. So that's the secrets